Welcome to the Deep Dive. We're the podcast where we take a whole stack of sources and basically make you instantly informed on the big topics. And today, well, we're really tackling something significant, India's new tax reforms, specifically the new income tax bill 2025.
Yeah, our insights are coming straight from this really interesting piece called Excerpts from India's New Tax Bill, Simpler, Fairer, and Taxpayer-Friendly. So our mission here, it's really to pull out those key nuggets, the surprising bits about how this bill plans to overhaul India's tax system. I mean, the article makes this bold claim, doesn't it? Moving from 60 years of complexity to something actually taxpayer-friendly, a law that works for people. That sounds ambitious. Let's dive in.
It really is ambitious. And, connecting to that idea of leaving 60 years of complexity behind, what's fascinating is how the source emphasizes these foundational promises, things like compliance getting easier, fewer disputes, and just making tax filing, well, less stressful. That's the core idea. Less stressful. I think anyone who's ever, wrestled with tax forms can get behind that.
Yeah.
So let's start with individuals. What are the standout changes that really hit home for the average taxpayer?
Well, there are some very practical things. Take refunds, for instance. You can now get refunds even if you file your return late. That gets rid of the old penalties.
Oh, wow. Okay.
Yeah. For decades, someone might have missed out on a legitimate refund just because they were a bit late. So this is a real shift. It's less punitive, more supportive.
Right. More about supporting the taxpayer than catching them out.
Exactly. It builds trust, reduces anxiety. It's not just financial. It's psychological relief, too.
That feels like a fundamental change in thinking. What else jumps out for individuals from the source?
Another really practical win is the zero TDS certificate for people with no actual tax liability.
TDS, tax deducted at source.
Right. So tax often gets taken out up front. If you didn't actually owe any tax in the end, you'd still have it deducted and then have to wait ages, months, sometimes a year for the refund. Ah, okay. So this certificate stops that.
Precisely. The money stays in your pocket. Better cash flow, less waiting, less bureaucracy. It's a simple change with a big impact.
It makes sense.
And there's more like no extra tax on education loans for studying abroad. That's a huge help for families. Plus, for homeowners, the rules around that 30% house property deduction, they're much clearer now. Less confusion there.
Okay, so some solid relief for individuals. But, businesses are often where the real complexity lies, and they're crucial for the economy. How does this bill help them?
Absolutely crucial. And for businesses, these changes are really about stability and encouraging investment, giving them predictability. The article points out fixes to dividend deduction errors for companies. Sounds technical, maybe, but it removes a real headache, something that could cause disputes.
Right.
And for LLPs, limited liability partnerships, there's assurance that tax rate stays at 12.5%. There was talk of hiking it to 18.5%, so this certainty is, well, very welcome. It supports that business structure. And what about those areas that always sound complicated? Like transfer pricing, loss carry forward. Those always seem to cause issues.
You're absolutely right. Those can send shivers down a finance manager's spine, like you said. So for transfer pricing, which affects businesses operating across borders, the rules have apparently been clarified significantly. Fewer gray areas mean fewer long, drawn-out arguments with the tax authorities.
That alone must save a lot of time and money.
Immense resources, yes. And similarly, carrying forward losses from previous years that used to be a bureaucratic nightmare, now the rules are simpler, easier to manage. It all contributes to the ease of doing business.
It's good to hear it's not just focused on profit-making companies. The report mentions nonprofits, too. They're vital, right? What's changing for them?
Yes, and this seems quite strategic for the nonprofit sector. The big thing is a 5% exemption on all donations, not just anonymous ones like before.
All donations, okay.
Yeah, extending it like that could really streamline funding, makes it more attractive for people and companies to donate to causes they care about.
So potentially more funding flowing to social initiatives.
That's the idea. More flexibility, potentially boosting the whole philanthropic ecosystem. It helps nonprofits expand their work.
So we've looked at individuals, businesses, nonprofits, specific groups getting specific benefits. But beyond that, what's happening at the foundational level? You mentioned the end of 60 years of complexity. How does the bill actually make the whole system simpler for everyone?
Well, think about it like trying to build a house with blueprints drawn over 60 years, some contradicting others. India's tax code was kind of like that. This bill is attempting a fresh start, a logical foundation, and the structural changes are pretty remarkable. First off, a 50% reduction in the number of sections, just cutting the sheer volume you have to wade through.
50%? Wow, that's a lot.
It's huge. Think about the cognitive load that removes, and then there's the language itself.
Ah, yes, the infamous tax jargon.
Exactly. This bill makes a point of replacing a lot of that dense legal jargon with plain English, understandable language.
That would certainly help.
And to make it even more practical, they've included 39 helpful tables and 40 clear formulas, all designed to reduce confusion, which should mean fewer disputes down the line. So you cut the sections in half, you use plain English, you give clear tables and formulas. You're fundamentally simplifying the entire interaction.
Making it accessible not just for experts.
Right, for ordinary citizens, for businesses. It builds trust when the law isn't deliberately obscure. People are more likely to comply if they actually can understand what's required. Less stress all around.
So bringing it all together, the bottom line, as the source puts it, seems to be compliance gets easier, disputes get reduced, tax filing becomes less stressful.
Yeah. Okay, so stepping back, what does all this truly mean for India? What's the bigger picture here? Well, if you connect these dots, the individual relief, the clearer business rules, the support for nonprofits, the systemic simplification, you see a major economy making a serious attempt to overhaul a system known for its complexity for, well, decades. It really ladders up to that vision of a tax law that genuinely works for people. It's about embedding trust and efficiency into that core interaction between citizens, businesses, and the government. Ultimately, it's about creating an environment where, growth can happen more easily because that regulatory friction is reduced.
It sounds like a potentially transformative shift.
It does, and it makes you think, doesn't it? When a system this fundamental, like taxation, undergoes such a major simplification after 60 years, what are the wider ripple effects? How could a truly taxpayer-friendly approach change how people engage with the government or even influence economic behavior? Could it perhaps be a model for other countries struggling with similar complexity? Something for you, the listener, to consider.
Definitely food for thought. We've covered a lot of ground today, from specific deductions to overarching structural changes. As you think back on our deep dive, which particular benefit or change we discussed really stands out to you? Which one seems like it could have the biggest impact in India?